Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Giulietta.
Garth, last week you implemented a short on Exaro, and it was looking very, very wobbly. In fact, just after you put the short position on for the portfolio. How's it been playing out, and are you still in the position?
Yes, I'm still very much in the position. I'm quite happy to sit with this position as things stand at the moment. Obviously, last week we identified what you can see on the chart on the screen at the moment now is a very large descending triangle structure. So what you've got is a series of lows through 137 Rand here. And this goes back, we've seen the stock touch that level multiple times over the last year or two. But that level actually goes back even further. About 3.5 years back was the last time that we really saw the share trading below this level. And what worries me here is that you've got a consistent pattern of falling highs and obviously this flat bottom. And usually when you see a pattern like this, it will invariably break to the flat side, being the downside in this case. So I'm still expecting that we'll see a significant breakdown in this share price underneath 137 Rand. And then I think if we get sustained selling below that level, it could actually get quite nasty.
And also, it looks as if there's a bit of a head and shoulders pattern there.
I suppose you could argue that that's a big, like a compound head and shoulders, I suppose, if you want to look at it that way. Either way, the outlook would be the same. It would be potentially quite bearish. And I think if we did start to see selling activity underneath 137 Rand, then effectively you would have 3.5 years worth of stale longs, all potentially wanting to frustratingly sell the share. So on that basis, we went short. I actually went in last week in two different tranches. I went short initially at 141 Rand 97 off of that downtrend, which I've shown there. And then when it broke down, we actually had news last week that the company was writing off 5.3 or would write off up to 5.3 billion Rand of a iron ore project in the Republic of Congo. And we saw the stock gap down on that news. It has been relatively stable since then, but we've certainly seen no significant upside. And it just once again looks as if the share price is sort of hovering and teetering, waiting for something. Now, I've received a number of emails over the last week from people saying, but many of these other broking houses have buy recommendations on the stock or outperform recommendations. And am I sure that I'm doing the right thing by shorting here? Look, first of all, I'm very much guided by what I see in the charts and what I see in the trading action. And this trading action to me is not looking great. It really isn't. And my feeling is that a lot of the time that a lot of the fundamental aspects are actually factored into the price at any given time anyway. If this share was so good and all the analysts out there that had buy recommendations and target prices north of 150 Rand and whatnot, if it really was that good, I'm sure that the trading action and the price would be better.
Yeah, and it would reflect all that enthusiasm and support, because clearly someone's selling.
Yeah, absolutely. And if you look at this chart, it's just telling you that the sellers actually have the upper hand in this battle here. So not to get on the wrong side of any fundamental analysts or anything, but they often are, but behind the curve. And only once things start to potentially go wrong do they then realize, oh wait, the share's not a buy, it's actually probably a sell. And if I look at the trading action as I'm seeing it here, that to me, that chart looks extremely vulnerable to break to the downside. And for that reason, I'm happy to be short of it.
And Garth, that introduces another point where if you're long of a stock, you like to be long of a strong stock in a strong sector. So for you, would Exaro be a weak stock in a weak sector? And that's one of the other reasons why you've decided to short it.
Yes, very much so. You need to get your sectors right and be on the side of the momentum. So if you're looking to short the market, if you want to have a negative or bearish position in this market, you'd be best off looking to try and focus on the weaker sectors of the market and then look at the weakest stocks in that sector. So we've got resources being one of the weaker sectors in our market now, and Exaro definitely is one of the weakest stocks in that sector. So if you're looking to try and short the market, that's where you want to be trying to focus your shorts. Going out and being short on strong stocks, like there's, for example, Naspers. There's so many dead bodies lying around the trading arena of people who've tried to short Naspers, and it's a strong stock in a strong sector. Why would you want to short that? Rather look to try and get on board the momentum and trade in the direction of the momentum. In this case, this stock is weak. It's in a weak sector. It does look very, very vulnerable if I look at that chart. And I don't know when we're going to see a breakdown. It might be soon, or it might be sometime in the next 6 months. I don't know. But I'll, as a betting man, I'll put my money on the line and say I think this share is definitely likely to go lower.
And the other thing one has to remember, and I know you want to draw some sort of comparison to Able. Able had lots of buy recommendations before it started falling off a cliff.
Absolutely. I think most of the fundamental analysts out there, when Able was 30 Rand a share, it was a buy, it was an outperform, etc., etc. Well, now it's 6 Rand a share, And the irony is that now they're starting to call it a sell, which is probably also wrong.
Okay, and don't ever forget that there are always egos in a market. So it doesn't matter how clever you are, and you might be a top fund manager, but you can get it wrong too, and your ego can override what you see the share price actually doing.
Yeah, very much so. But on this show, we don't let egos get in the way.
No, we certainly don't.
If I'm wrong, I'll gladly come on TV and say so, and I'll execute my stop loss, and I'll concede that I was wrong.
Okay. What about PSG, Garth? That's a stock that you're looking at, and I've been getting quite a lot of calls, or rather questions on Stockwatch recently about why PSG has come off fairly significantly from its highs and what's going on there.
Yeah, this is a very interesting looking setup, and we're initiating a long trade on this stock today. There's quite a few things to talk about around this, but let's quickly look at the chart and then we'll talk around some of the other stuff. That chart, first of all, if you look at it, there's a very, very neat upward trend that joins all the lows from June last year. So that's a 1 year upward trend. Also, what we've got is through all the highs and lows of the last 8 months or so, you can see this 92 Rand area has provided a pivot point on a number of occasions. And we've now seen the share price pulling back to 92 Rand, which is where we get this uptrend offering support as well as that horizontal support as well. What's also pretty evident there is that we've seen the price making what looks kind of like a downward channel, or you could call that maybe even a bull flag pattern over the last 2 months or so. And that to me is a very healthy consolidation. And by and large, the long-term uptrend remains very much intact, but that recent consolidation is quite healthy. If you look at our stochastic oscillator over there, you'll see that the stock is very, very oversold now. What is very interesting to note is that yesterday being Monday in this case, we saw unusually large volume trading in the stock. And what I think happened here is that recently the company did a book building exercise to issue new shares in order to raise fresh capital. And they used that, well, they will be using that fresh capital to fund growth within the business, to probably follow their rights in the Curragh rights issue and so on. They needed fresh capital. So they raised 920 million Rand in a sale of new shares, and those shares were placed at 95 Rand each. Now, ordinarily, you would think that 95 Rand would probably provide a bit of a floor for the share price, and that it's unlikely to go a lot lower than that. Now, if we actually look at the hourly chart of PSG here, what's quite interesting to note, and as I say, this is an hourly chart, so what each one of these candlestick patterns represent is 1 hour's worth of trade. And we're going back here to the 17th of June, so we're talking about 2 weeks worth of trading action here. Now, what's very interesting is notice this volume spike yesterday. We saw lots and lots of volume trading, and that volume happened as the share price broke underneath 95 Rand. So that's where your rights issue, or not a rights issue, it was book build. Your book build, the new shares were placed at 95 Rand. The moment the stock went underneath that 95 Rand, suddenly what you would have probably found is that a whole bunch of these new shareholders that had come in through the book build were now losing money. And it sparked a bit of selling pressure, quite a lot of selling pressure as it were, and that you can see reflected in the volume. But it's not correct to say, well, there was only selling pressure, because for that amount of volume to have gone through the stock, there must have also been a lot of buying pressure as well. And what I love these volume spike situations, because very often when you see a volume spike like that, it is indicative of a bottom in a share price. And the dynamic works that you've got all these weak shareholders that sell out or capitulate out of their stock and sell it. On the other hand, you've got strong-willed shareholders coming along and they're saying, hey, you know what, I thought at 95 Rand 2 weeks ago when the book build was done that was a bargain. Now I can get it at 92 or 93. That's even more of a bargain. So you've got these diametrically opposed views on the part of the sellers, which are capitulating, and then you've got the buyers, which see an opportunity, see a bargain, and they behave in a more rational fashion and take up the stock. And typically when the sellers have finished selling out, there's a vacuum of selling pressure left behind. And I think that's what we've seen here today. The stock certainly has rebounded quite nicely. Just in terms of the technicals as well, on the hourly here, you can see our relative strength index was making positive divergence. Now, positive divergence in this instance, basically it indicates that the momentum of that downward move is waning and that you're about to see a change in trend. It's a very reliable indicator. And you can see here that your RSI rather makes a higher low when your share price makes a lower low, and that preempts a change in the trend. So given all of that, I went along and I've bought this morning at 93 Rand 20, and I set a stop loss at 91 Rand 30. And it certainly seems like it's working out quite nicely for us as things stand now.
That's quite a tight stop loss, isn't it, Garth?
It is a fairly tight stop loss, but my feeling is that it's far enough away from yesterday's capitulation sell-off. And the likelihood is that we've already seen the weak hands being flushed out, and the likelihood of that level now being breached, or yesterday's low now being breached, is very slim from here, in my view.
Garth, before we go through the mechanics of the trade, just on a book build, and you used the word accidentally, the term rights offer. What for investors out there who are a little bit hazy on the difference between a book build and a rights offer is the difference? Well,
a book build it's a placement of stock, be it an existing shareholder looking to offload existing stock and a large chunk of stock. It can also be the company selling new shares into the market to raise fresh capital. The idea behind a book build is that it's a large chunk of shares. I mean, in this case, we were talking nearly R1 billion worth of stock that was placed here. Now, if PSG, the management of the company, had to go and actually place 920 million Rands worth of stock into the market, they'd be selling for weeks and weeks and weeks on end to try and put that through the market. So what they do is they announce an accelerated book build process where they get 1 or 2 or 3 investment banks on, and they say, right, we've got all this large block of shares we want to sell, you go out and find us buyers. And then those investment bankers will go along to all their connections in the market and place that stock with the various pension funds or whoever it might be that wants to take up the stock. And that's the purpose, so that it happens quickly and it doesn't result in any short-term pressure on the share price. That's what a book build is.
Yeah, and it's generally regarded as a positive. So even though there was a little bit of selling pressure afterwards, as you see, it has rebounded.
It's mostly positive. Sometimes it depends on the purpose for doing it. You know, in the case of African Bank having to raise new capital to keep the business alive recently, that's not so positive. But in this case, we've got a great company. They're looking to try and utilize those funds to fund further growth in the business. That is good news, yes.
Okay, so let's have a look, as I said, at the mechanics of the trade.
So we're buying it at 93 Rand 20. The stop loss I'm using is 91 Rand 30. The risk per share, therefore, is 1 Rand 90. I'm going to risk 1.5% of our trading capital on this. Now, we've got 320,000 Rand available to us, so 1.5% of that is 4,800 Rand.
It's a little bit less than normal. Is it just because you've got a couple of open positions, or?
It's not actually. I mean, we don't have a huge amount of open positions, not on the long side. We've got more short exposure at the moment. The reason I've gone in slightly lighter here is because PSG can at times be a little bit illiquid. Okay. And I do run the risk of a little bit of slippage. So my stop loss is 91 Rand 30, but you know, in an illiquid stock, it's possible that I might not get that price and I might end up having to sell it a little bit lower. So I've kind of given myself a little bit smaller risk, knowing that the things could be different.
Could go against you.
Yeah. Okay, so I take the capital risk and I divide it by our risk per share, and that leaves me with 2,526 shares. So I'm rounding that down to 2,500 CFDs. Now, the target that I'm looking at, I think there's a realistic possibility that we could see this share price going back to 110 Rand over time. Now, that is quite a long way away, but I mean, based on the technicals, I can't see why that wouldn't happen. So that gives us a really fantastic risk to reward ratio of 1 to 9 in this case. So, you know, if it works, this is going to be a fantastic trade for us. But let's see how it plays out.
Okay, Garth, we have to very quickly have a look at what the portfolio is doing in your next course and then wrap it up.
Well, here's all our current open positions. We've got an option structure out to September. We've got our short position in Exara and then this long position in PSG that we've done today. Our portfolio is sitting just shy of 320,000 Rand, so it's up 28% for the year to date. And then in terms of courses, I've got one course left in this current series of courses that I've been running down in Port Elizabeth on the 10th and 11th of July, an understanding CFDs course on the Thursday evening, followed by a high probability trading course all day on the Friday. So if anybody's interested in attending that, please email me, garth@traderscorner.co.za, or you can also go to my website and register there as well.
Great. Garth, we'll leave it there and chat to you next week. Thanks always for joining us. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.